American Airlines crashing down to earth with a literal bang. Can this company avoid bankruptcy, or is this just another blimp on the radar back to better profitability? Let's find out right here, right now, as we do a stock analysis and intrinsic value on American Airlines. But first off, we need to understand what is American Airlines as a business and what is the business model, how it makes its moolah. And then we will look at what's happened in the last month for the stock to go down over 50%. And then we'll have a look at two positives and two negatives to growth into the future. And then we'll go into deep dive into stock analysis. And stay right to the end of the video, and I'll give you the potential intrinsic value for American Airlines. They might shock you all. Let's get to it right here, right now, at Barry Charles. Yes, American Airlines. What is this business all about? Well, you'll find out right here, right now. If you don't know, it's clearly about airplanes, but let's get on to it. American Airlines is one of the largest airlines globally, headquartered in Fort Worth, Texas. It operates an extensive network of domestic and international flights, seeing over 350 destinations all over the world. The airline is a founding member of the One World Alliance and maintains joint ventures with carriers like British Airways, Japan Airlines, and Qantas, enhancing its global reach, connectivity. American Airlines all the way. Well, how does American Airlines make money with the business? Well, basically the main way they make money is through passenger service on their planes, clearly, with business class and economy class, first class in America, offering both international and regional flights. With one of their regional flights called the Eagle brand. Sorry, I missed out what the other part of it was. American Eagle brand. Additional income streams for this company is through cargo services and the sale of loyalty points through their AA Advantage programs, which is bolstered by the partnerships with financial institutions like Citibank and American Express. So why is the stock down 50%, folks, in the last less than 2 months? Well, there's been two key factors in this. One was their financials, absolutely disgusting, bad financials. American Airlines adjusted its first quarter earnings forecast, which was anticipated to be low at 20 to 40 cents to 60 to 80 cents less a share. Wow. And also revenue from 3 to 5% increase growth in the last 3 months to going flat. And I wouldn't be surprised if it goes minus. That's not good going into 2025 for this company. The number two reason is economics and the policy uncertainty. So the economic concerns, obviously the Trump still with all these tariffs going around, it's not happening business. People less wanting to travel. Reduction in government spending, which could cause them not to spend on American Airlines if it goes boo. Yes, so that's the question marks. Obviously in corporate travel, less people traveling at the moment will drop into their profits. But it's not all doom and gloom out there, folks. No, there is hope for American Airlines. One positive, last year they went record $54 billion for the year, so that's positive, but it's going to crash and burn in 2025, that's for sure. Number two for positive growth is the premium service enhancements. The airline is investing in the premium customer experience, exemplified by the upcoming flagship lounge in Philadelphia, with meals and upscale amenities. The company is looking to go forward. But what are the challenges right here, right now for this company in terms of growth? and that's labor relations. So American Airlines faces ongoing challenges with their labor relations, with disputes over overpay and underlying conditions, which leads to strikes and employees' dissatisfaction, disrupting operations. American Airlines um, really needs to do something, and pretty much why this company is absolutely in dire straits at the moment. It's got substantial debt of $31 billion. When you're saying their revenue is $54 billion for the year, oh my God, no. Throw it away, throwing your paper away at the moment with American Airlines. But wait till the end of the video, you might be shocked. So managing debt is obviously going to be something big for the future of this company. Can they get themselves out of trouble, out of debt? That is the question mark going forwards. Yes, otherwise they will end up needing to be bailed out by the government. And if they don't do that, they will go bust down a bottomless pit of despair, disappear into the Bermuda Triangle, and never to be seen again. Now, after all that hoopla, it's time to do a stock analysis on American Airlines, where we look at revenue, net profit, return on invested capital, shares outstanding, free cash flow, and so much more right here on one video for you at home. Yes, and all I ask is for you to smash the like button and subscribe to the channel. It would make the world a better place. Let's get to it. Yes, let's have a look at the stock analysis here on American Airlines. Well, let's first start off with price. At the time of recording, it was $9.50. 52-week range of about $8.50 to $19.10, well over there. So it's been halved from its high, so not good. Earnings per share, 1.51, so not much, and PE ratio is 6.3. No dividend. The short interest is quite high at 7.7. It might not be a bad bet, that one. Market cap, only $6.3 billion for a company that's been around a very long time. I just know what's doing there. Financials, yes, what's actually happening right down to the bottom line here. So revenue, $52 billion. Up from $49 billion to $45 billion, but I'm scared to see what the next one is going to be. If revenue is supposed to be flat, I'm going to say $51 billion. Net profit, $846 million from $822 from $127. For obviously the COVID period, it was disastrous, so it's going to look good. But the last year hasn't grown much, and going into 2025 looks like the same. If we try to say we can improve it, if we look at quarterly figures here, of $13.6 billion, $13.6 and $14.3 billion. So they were going backwards in revenue the last 3 quarters. And in terms of net profit, $590 million this quarter. The quarter before they lost $149 million, and then profit of $717 million. Not good. So it's all over the show, inconsistent. Maybe not the stock for you. Return on invested capital, a low 3.5%. Free cash flow, $2.2 billion. But they got debt of $31 billion. Doesn't make sense. And how much are they going to have after this year? They might be going into their free cash flow profit, I assume. What else is doing with this company? Shares outstanding, 657 million. Increased over the last couple of years, so they are ripping you off and taking your money. Let's have a look at total assets of 61 billion, down from 61.7 billion, down from 64.7 billion 2 years ago. So they are dropping, and the same with liabilities is dropping as well, and from 70.5 billion to 65.7 billion. So that's an improvement, but when it's higher than total assets, oh my God, I'm scratching my head on that one. So not good. So they need to really work on that, and bankruptcy could be on the cards for this company if you look at some of these figures. Well, yes, we've had a little look at stocks. The stock analysis of American Airlines there. I'm not 100% convinced, but I thought I'd do this intrinsic value, and it could have swayed me a little bit. I don't necessarily agree with the figures, but hey, that's what the Graham's calculator does, which we do each and every time here on the channel. So the current share price, earnings per share, growth rate, and the bond yield to give you the potential intrinsic value of the company at different rates. So I go through them all. I go from the bear to the bear case to the base case, roughly where they are at the moment, optimal case, extra case, and then out of this world, pie in the sky theories. You wouldn't think it would ever happen, but if it does, then wowee. So let's have an opportunity here to see. I give you all sides of the story. So I give you the bullest of the bulls and the bearest of the bears, and then you decide at home what you do. Not financial advice. Do your own research before you invest in any stock. And when I look at this intrinsic value, folks, just to courtesy on this, this is only a start. You have to look at returning on invested capital, revenue, all this stuff, free cash flow, all this, as well as what this figures are telling me. This is just a guide. It's not absolutes. This is what is going to happen, but this is potential for what can happen. But airlines always don't go up as high as other stocks. It's just simple as that. But yes, so let's go. The bear case here for intrinsic value. So all the current share price is $9.50 with earnings per share of 0.5, so below where they are currently, with a growth rate of 5%. With the current bond yield about 4.3 for the 10-year yield, you're looking at a fair valued stock, believe it or not, and they are supposedly making more money than that. So we go to the base case here, a 1.51 earnings per share, a growth rate of 5%, roughly where they are at the moment, of 4.3. The stock is $29, folks. I'm not kidding. I'm scratching my head with that one. Yes, but we've seen airlines have been higher in the past, so potential for that to grow. So maybe you could put a sneaky one on this one, folks. Then if we go to optimal case, and with a 2.5 earnings per share and going up a bit to 7%, you're looking at an $88 stock. What? And then we go to extraordinary, we're going to go to 3.5. And then 10 for the growth rate, you're looking at $104 stock, folks. I think the other one was supposed to be $58. Sorry about that. Something like that. Out of this world figures, folks. Out of this world. Yeah, we're looking at 5% earnings per share from where they are, 1.51, and 15% growth rate. The current bond yield, this is a $200 stock every day of the week. Well, if you think that happens, just buy, load the boat. You got a 10 banger right there. Do I see it happening? No, thank you. I'll be stunned if that happened. But the base case, absolutely. The base case is there, so you can triple your money. So don't not go for it if you think this is a potential stock for you. But is it going to be the one that's going to go metabolic and go to $500,000? It ain't happening. Absolutely ain't happening. But it's a potential bulk. It could be a nice dip, especially if it drops down to $35. Then really start to buy it. But it could be going into debt falls too. That is the problem you might have. So this is not financial advice. Do your own research before you invest into any stock. But anyway, that is the Barry Charles episode for this stock analysis of American Airlines. Giving you the intrinsic value so you can do a bit more research to understand. Hopefully this ain't going to be a scar on the company and the company's going to go bust. Let's hope American Airlines turn it around for all you investors out there that are in it and maybe looking to invest in it. I'm not investing in American Airlines, just to be fully disclosure. I do these videos just for you. So remember to like and subscribe, and I'll be back with another video soon.